My name is Susan Combs, and today we're going to talk about the definition of supplementary insurance. With supplemental insurance, how it works is just kind of what it sounds like. It supplements what you currently have. So in terms of, like, if we're talking about, say, health insurance, you have typically a policy that's going to cover your doctor's visits and hospitalization, but you might have some out-of-pocket expenses. So out-of-pocket expenses such as your deductible, your copays for your prescription drugs, and also the co-insurance split between you and the insurance company until you ultimately get to a max out-of-pocket number. If you have a supplemental policy, what those can do is actually provide you money to make you as whole as possible with those out-of-pocket expenses. Another way a supplemental policy can come into play is sometimes what it does is if you do certain things, it'll pay you a lump sum. So for example, if you go for your annual exam or your annual physical, it looks at that as, you being a good steward and you trying to have a healthy lifestyle. So a supplemental policy might give you an extra, say, $25 or something like that if you go for your annual physical. If you are a woman that's over 40 and you go get a mammogram, then the supplemental policy might say give you X number of dollars to, since you're being a healthy steward as well. Then also supplemental policies, they might have things like if you were diagnosed with cancer, they'll give you X number of dollars per day while you're in the hospital because they know that you're unable to work. So there's a lot of different ways that you can look at supplemental policies. The best thing to do is to talk to your broker and see exactly what type of supplemental policy you can get, and tell them what your fears are and tell them what you're worried about, and then they can try to help insure it the best way possible.